In this video, we will quickly review the 7 steps to investing as a teenager. Step number 1. Learn stock basics. There are some great investment websites that explain stock basics in a way that can be understood by very young investors. For example, the U.S. Securities and Exchange Commission has a free website for beginning investors called investor.gov. In addition, our website, teenvestor.com, was created just for teen investors. It has lots of free information specifically for teens ages 13 to 18. Finally, for teens who want the easiest way to learn about stock investing, we offer the Teen Investor Stock Certification course, which is the only complete stock investment course for teens on the internet. The links to these websites and others are shown in the video description below. Step number 2. Consider your hobbies, interests, etc. It can be difficult to decide what stocks to consider when starting your investing journey. Here are some hints about what you should consider just to get started. Companies associated with your hobbies and interests. Businesses in which your relatives work. Companies that produce some of the items your friends and classmates like. Companies headquartered in your state. And big companies included in an index such as the Dow Jones Industrial Average. Step number 3. Review a company's annual report. An annual report is a document used by public companies to disclose information to their stockholders every year. It usually includes an opening letter from the chief executive officer, financial data, results of operations, market segment information, new product plans, subsidiary activities, and research and development activities on future programs. In the video description below, I've included links to annual reports of a few companies you may know. Step number 4. Get detailed financial information. At some point, you will need detailed information about a company's financial performance and the performance of its competitors. This may include how much a company makes, how much it has borrowed, how much it owes, etc. I use 3 main websites to get such financial information about any company I want to research: Yahoo Finance, MarketWatch, and Morningstar. Links are shown in the video description below. Step number 5. Set up a virtual stock portfolio. Setting up a dummy or virtual stock portfolio is a way aspiring teen investors can overcome the fear of taking that first step in stock investing. Here are a few free websites that allow you to set up a virtual stock portfolio: Teenvestor Stock Game, MarketWatch Virtual Stock Exchange, Wall Street Survivor, and How the Market Works. The links to these virtual stock portfolio portals are shown in the description below. Step number 6. Ask your parents to open up a custodial account. Minors are not allowed to trade stocks and other financial assets. If you are a minor, you can make investments only under the supervision of your parent through a custodial account. Your parent will have to establish a custodial account offered by an online broker, with you as the beneficiary. You would own the assets in the custodial account, but technically, your parent would control the investments in it, hopefully with your help, until you are no longer a minor. Obviously, you can help make the investment decisions with your parents' approval. See a link to the top 10 custodial accounts for teens in the video description below. Step number 7. Avoid investment scams. If someone promises you guaranteed profit that is much higher than you can get by investing in a broad stock market index fund, you should be very suspicious. Over the long run, such a fund will only yield about a 7% to 9% return each year. Indeed, there are times when the return in the stock market can be extremely high. For example, in 2021, the return on an investment in a broad stock market fund that tracks the Dow Jones Industrial Average yielded a return of about a positive 19%. But in 2008, the return of the same type of fund was a negative 34%. So, no one can guarantee you a steady return each and every year if they invest your money in stocks. Just keep the 7 to 9% figure in your mind as a normal return. Anything much higher has to be much riskier than putting your money in a broad stock market index fund. We have more information below on avoiding investment scams. Please subscribe below so I can continue to provide you with great information on how to invest as a teenager.